Jai Hind everyone, welcome to my YouTube channel which is Explore Yourselves, Banking and General Knowledge etc. Your next promotion is not just a step up in your career, it's a step closer to your dreams, your respect and your financial growth. The bank promotion exams 2025-2026 is a golden opportunity and I'm here to make sure you grab it with both hands. In this journey, we will learn smart strategies, master important topics, and tackle questions just like the exam demands. Remember, success doesn't come to those who wait, it comes to those who prepare. So let's start today. Prepare smartly and make your promotion in 2025-2026 a reality. Welcome to part 9 of my Path to the Corner Office 2025-2026 series, where we break down real bank promotion exam questions and give you clear practical sample answers about case studies and group discussions to help you climb the career ladder faster. The subject for today is some case studies. Previous case studies links are available in the description. The first case study for today is the salaried applicant with high income. Scenario: Mr. Sharma, a 45-year-old senior manager in a reputed MNC, applies for a loan to purchase a new four-wheeler costing rupees 15 lakhs on road price. His gross monthly salary is rupees 4.5 lakhs. He has an existing personal loan with an EMI of rupees 35,000. His CIBIL score is 780. Questions. Calculate the maximum eligible loan amount for Mr. Sharma based on his net take home pay and THP. What will be the applicable processing fee for his loan? What is the maximum repayment tenure allowed for this loan? The solution: eligibility calculation is gross monthly income equal to rupees 4.5 lakhs falls in the greater than 5 lakh slab for NTHP. Permissible NTHP equal to 25% of 4.5 lakhs equal to rupees 1.12500. Existing EMI is equal to rupees 35,000. Available NTHP for new vehicle loan EMI is equal to rupees 112,500 minus rupees 35,000 equal to rupees 77,500. The maximum EMI he can service is rupees 77,500. The actual loan amount will be derived by reverse calculating the EMI for a 7-year loan at the applicable interest rate. Processing fee. For a new four-wheeler loan for an individual, the processing fee is 0.25% of the limit, subject to a minimum of rupees 2,500 and a maximum of rupees 10,000. Repayment tenure. For a new four-wheeler, the maximum repayment period is 7 years, 84 months. The second case study for today is financing a used car. Scenario: Miss Reddy wishes to purchase a used car that was originally registered 2 years ago. The on-road price when new was rupees 12 lakhs. The car's current appreciated value as per the bank's valuer is rupees 8 lakhs and the sale consideration is rupees 8.5 lakhs. Questions. What should be the margin applied and on which value? Calculate the maximum loan amount the bank can sanction. What is the maximum repayment period for this loan? The solution is margin. For second-hand vehicles, the minimum margin is 30% on the depreciated value or value assessed by valuer or sale consideration, whichever is lower. The lowest value here is the valuer's assessment of rupees 8 lakhs. Maximum loan amount margin is equal to 30% of rupees 8 lakhs, which is rupees 2.4 lakhs. Maximum loan amount is equals to valuer's assessment 8 lakhs minus margin rupees 2.4 lakhs is equal to rupees 5.6 lakhs. Repayment tenure for a pre-owned four-wheeler, the maximum repayment period shall be 7 years from the original date of registration. The third case study is the partnership firm's application. Scenario: a partnership firm ABC and Co applies for a loan to purchase a commercial vehicle. Note: the circular specifies personal use, but this is a common exam trick. Let's assume it's a vehicle for the firm's use, falling under entities other than individuals. The project cost is rupees 40 lakhs. The latest audit balance sheet shows a net profit of rupees 30 lakhs and depreciation of rupees 5 lakhs. The firm has an existing term loan with an annual debt service obligation of rupees 15 lakhs. Questions. What is a key financial ratio to assess eligibility for non-individuals and what is its minimum requirement? Calculate the debt service coverage ratio, DSCR, for the firm. Is the firm eligible based on the DSCR? Solution. Key ratio. The calculation of the quantum of loan is linked to the debt service coverage ratio, DSCR. The minimum DSCR required is 1.25. DSCR calculation is net profit plus depreciation plus interest on term debt, if any, assuming interest is part of the debt service. Let's use net profit plus depreciation is equals to rupees 30 lakhs plus rupees 5 lakhs is equal to rupees 35 lakhs. Total debt service existing plus proposed for new loan would need to be calculated. However, the circular states DSCR should be minimum 1.25 based on the latest balance sheet, typically considering the proposed debt. For this case, we assess capacity. Net operating income approx rupees 35 lakhs must be at least 1.25 times the proposed annual debt obligation. Eligibility. The proposer needs to demonstrate that the projected annual loan repayment AMI into 12 is such that DSCR is maintained at or above 1.25. Without the exact EMI, we can only state the condition. The sanctioning authority will ensure this. The fourth case study for today is the senior citizen applicant. Mr. Gupta, a 68-year-old pensioner drawing his pension from Bank of India, wants to purchase a new electric car costing rupees 10 lakhs. Questions. Is he eligible for the loan given his age? What condition applies? What concession is he entitled to on the processing fee? What special requirement is needed for an electrical vehicle? Solution. Age eligibility. The age of the individual should not exceed 65 years at the time of availing the advance. Therefore, Mr. Gupta is not eligible under the standard scheme. A deviation would require approval from the SDLCC and above. Processing fee. Processing charges are waived for senior citizens and pensioners drawing a pension from Bank of India. EV requirement. Registration with the RTO is mandatory for EVs with power consumption greater than 0.25 kilowatts or speed greater than 25 km per hour. A green color license plate with white letters for individual use is mandatory. The fifth case study for today is takeover of a vehicle loan. Mrs. Kapoor, an existing customer of your branch for the last 3 years with a satisfactory account, wants to take over her car loan from another bank. The car was purchased 18 months ago. The loan account with the other bank is standard with no defaults. No insurance claim has been made. Questions. List the key eligibility criteria for a loan takeover. Is Mrs. Kapoor eligible based on these criteria? What will be the repayment tenure for the takeover loan? Solution. Key criteria for takeover. A. Applicant must be an existing customer with the status with a satisfactory conducted account for at least 2 years. B. The vehicle is not more than 2 years old. C. It is a single ownership vehicle. D. No insurance claim has been availed. E. The loan account with the other bank is standard. F. No change in ownership is envisaged. Eligibility. Yes, Mrs. Kapoor meets all the stated criteria. Repayment tenure. The repayment period will be as applicable to second-hand loans, that is, maximum 7 years from the original date of registration. The sixth case study for today is bulk proposal from a corporate. Scenario. Your branch receives 12 loan applications from employees of XYZ Private Limited for vehicle loans. Questions. Is this considered a bulk proposal as per the circular? List three specific due diligence measures that must be undertaken for such bulk proposals. Which authority must be informed if the bank has a corporate loan exposure to XYZ Private Limited? Solution. Bulk proposals, yes, 10 and above cases are considered bulk finance. Due diligence measures, any three. A. Employee status must be confirmed directly with the company. B. Documents like salary slips must be independently verified by bank staff. C. On-site visits to the applicant's residence must be conducted. D. All applications must be called for a pre-sanction discussion for discrete verification. E. An undertaking for a check-off facility must be obtained from the employer. Authority to inform the bulk loan sanction should be advised to the authority who sanctioned the corporate loan to the company to ensure the prudential exposure limit to the company is not breached. The seventh case study for today is disbursement and dealer due diligence. Scenario: a customer has been sanctioned a loan for a new car from an approved dealer, Speed Motors. The loan amount is to be disbursed. Questions: what is the preferred mode of disbursement? To whom should the disbursement instrument be handed over? What critical undertaking must be obtained from the dealer at the time of disbursement? Solution: mode of disbursement. As far as possible, the disbursement should be effected through NEFT or RTGS in the name of the vendor or auto dealer. Handover of instrument. The DD's payslip should not be handed over to the borrower of his or his representative at any point. It should be sent directly to the dealer with a covering letter. Dealer undertaking. An undertaking must be obtained where the dealer acknowledges receipt and agrees to deliver the vehicle. They also undertake to refund the entire amount to the bank if the order is cancelled or the vehicle is not delivered. The eighth case study is staff vehicle loan query. A confirmed clerk in your branch with a basic pay of rupees 40,000 wants to avail a staff vehicle loan SVL for a new petrol car with an on-road price of rupees 8 lakhs. Questions: what is the maximum quantum of loan he is eligible for? What is the applicable margin? Was this the rate of interest under the SVL? Solution: quantum of loan for a ward staff's clerk. The quantum is 90% of the cost of the vehicle or rupees 13 lakhs, whichever is less. 90% of rupees 8 lakhs is rupees 7 lakhs 20,000. So he is eligible for rupees 7 lakh 20,000. Margin: for a new vehicle under SVL, the minimum margin is 10% on the on-road price. So margin is equal to rupees 80,000. Rate of interest: the rate of interest for all limits under SVL is 5.5% per annum. Simple. The ninth case study is contactless loan through PSB 59 portal. A customer applies for a vehicle loan through the PSB 59 minutes portal. He is a new customer to the bank. Questions: what are the mandatory documents he needs to upload on the portal? What is the minimum CIBIL score required for a contactless vehicle loan? What is the stipulated timeline for the branch to dispose of the application after receiving it from the portal? Solution: mandatory documents. For a new customer, the mandatory documents are income tax returns, ITR, and a bank statement, bank generated PDF for the last 6 months. Minimum CIBIL score. The CIBIL personal score should be 700 and above for the contactless loan. Timeline. The application should be disposed of within a maximum period of 5 working days from the date of receipt of the completed application. The tenth scenario is special tie-up scheme. Tata Motors. A salaried individual with a CIBIL score of 710 wants to buy a Tata Nexon EV under the special tie-up scheme. Questions: what is the special margin offered for this model? What is the applicable NTHP ratio under this scheme? What is the unique free code 3 that must be used for this scheme? Solution: margin. For Nexon and Punch models and all EVs, the margin is 0%, meaning 100% finance of the on-road price is available. NTHP, the net take-home pay NTHP is 30% irrespective of income level under this tie-up scheme. Free code 3, the unique free code 3 to be incorporated is 522. Thank you very much for your patience. Please to like, share and subscribe to this YouTube channel.